So traders, welcome back once again to my YouTube channel. This is Turner Forex. So basically, in today's video, I'm about to show you guys an update, right? Yeah, just like did you guys call it update? So I want to show you guys an update on how to catch entries on lower time frame, like 1 minute time frame, then up to like 3 minutes time frame. Meaning that how to identify your change of character. So if you know you are the type of trader that doesn't prioritize knowledge when it comes to trading, just keep scrolling this video. Just keep scrolling. This video is not for you, okay? But if you know you prioritize knowledge, you want to you are opened up, for more knowledge, right? Then just wait, do yourself something good by just finding a place to sit down and watch this video to the end, right? So basically, whenever I want to identify my change of character, I do use the 1 minute time frame, and there's a lot of misconception that okay, on 1 minute time frames, there's a lot of noise, which is actually true. So basically, but in this video, I'm going to break down how to identify your change of character on the 1 minute time frame or any other time frame. But mostly I do my on either 1 minute, 3 minutes, or 5 minutes, and this particular pattern mostly works with gold. Yeah, so basically, let's get straight to the charts. So guys, welcome back once again to the chat, right? So basically, like I said the other time, I will be teaching you guys how to identify your change of character better, much more better on the 1 minute time frame than up to like 5 minute time frame, and identify a change of character on smaller time frame help you to find a very good stop loss, meaning that you are going to be using a small stop loss to bag a very big take profit. Like, instead of saying you want to take a trade blindly without confirmation and you'll be hitting like 1:3 or 1:4, if you should get to know how to use the 1 minute time frame, then up to like the 5 minute time frame, you will start spotting trades with small entries and a small stop loss, and then high risk reward, right? So now here it goes. So now basically, first of all, you have to know how to identify your swing points. So now what do I mean by that? So let's give an example. We have a high, we have a low, right? We have another high, then we have a low, then we have a sorry about that. Then we have a high again, then we have a low, then we have a high. So now in a case like this, we have a break of structure here, we have a break of structure here, we have a break of structure here, then we have a break of structure here. So now these are swing points. These are swing points. Okay, these are swing points. So now you can call these swing points 1 and this swing point 2. Mind you, we have something, let's say we have something like this also. You cannot call this a swing point yet. Why? Because it has not broken structure. Okay, so this is what you are going to call your swing point. This one is what you are going to call your swing points. This is 1 and this is 2. And here's the reason why I said you cannot call this your swing point yet. The market might still come down to clear this low, right? Then before reversing back up to clear this high. So that's the reason why I said you cannot call this one a swing point here. So basically, the only time you can call a point, okay, let's say this is a swing point, is when it has broken structure. So now let's go back to what I was explaining. So now, whenever you want to identify your change of characters on the lower time frame, you have to know how to use a double break of structure. Now, what do I mean by that? That's in a case whereby we have a high, then market break structure, created another low, right? The markets reversed again, created another break structure, created another high again. Now this is our structure 1. Why this is our structure 2? Okay, so now it is until market clears these 2 before you can say, okay, market has given you a change of character. Now immediately markets clear these 2 break of structure, immediately market clears this 2 low, you don't have to say, okay, you want to spot your entry immediately. You have to wait for a pullback. Now here's the reason why a pullback is very, very needed. If you should wait for a pullback, You have to wait for a pullback, something like this. Then you have to spot momentum above this side. Okay, then this pullback will serve as a liquidity. It will serve as an inducement. So after market has broken this low, the market is going to reverse back up to clear this inducement before selling off. Okay, and here is the reason why a pullback is actually very important. One of the reasons why a pullback is very important is because the moment market started creating a high, a low, a high, a low, and we have a high, a low, another high, another low, then a high again. You see all of this structure 1, all of this structure 2, all of this structure 3. Let's say this 1 and this 2. There might be a distance liquidity, meaning that markets might just be looking forward to just reverse up to this level, right? Market will just clear this trend line liquidity, reverse up to this level, and then keep buying. So that is the reason why you will need to wait for a pullback, meaning that this other block will need to fail. This other block right here will need to fail. So once it gets fails, then you can use the momentum here to say you want to take your sell. Okay, so all this is very important. If you get to know how to identify your break of structure better, your structure 1, your structure 2, then you are good to go. So now let's go to the chart to find the examples. One happened on gold on Monday. That was on the I think was it not that today is 10th, right? I think that was on the 5th, I mean on the 6th, yeah, of this October 2025. And one happened yesterday also on the 9th of October. That one was on EU. Okay, so let's go to the chart to find examples like that and to give you guys a better explanation of what I'm trying to say. Okay, yeah, so let's go to gold first. Let's go to gold. Let's go to gold. Come on now. Okay. So now on gold, I caught a buy on gold. It was on Monday, like I said, right? And it was, I used the 30 minutes time frame, by the way, to spot out my inducements. But the main purpose of this video is not to explain inducement or anything. It is to explain how to identify a change of characters. Change of character, I mean. Yeah, this is Monday trade. Let's give it a box. Let me delete all this. Okay, let me just create a box here. This is, oh, this Monday or Tuesday? Tuesday, yeah, Tuesday, not Monday. Okay, so using the 30 minutes time frame, as you can see right here, we have a break of structure here, right? We have a break of structure here. Then we have a pull. Hold on. Markets give us a high, a low, right? A high, a low. Then markets break the structure to the upside, creating a low again, then a high, right? So now in a case like this low right here is going to serve as our inducement. Why? It is simply because we have a momentum down below right here. So that is the reason why this point will serve as our inducement. Okay, so basically this low right here is an incomplete pullback because of this momentum right here. So we are seeing an order block around this side. Let me delete this. We are seeing another block and we are seeing FVG. This fair value gap. Okay, let me delete this so you guys won't get confused. Don't know why it's not deleting. Yeah, so basically we have another block and we have fair value gap. Now if you should notice, market did not tap the other block and market did not tap the fair value gap also, right? So this is other block on the 30 minutes time frame. This other block and this fair value gap. This one right here is fair value gap, FVG, right? So now good, market did not tap either of them, but market cleared the inducement, right, and then started buying, right? It's bought from there. Immediately it's cleared the inducement, it's bought from there. It's bought from there without tapping the fair value gap or the other block. So now a lot of people will be asking me, how did I take this trade? Now here's what I do. What I do on the 30 minutes or either the 1 hour or the 4 hours time frame is just to spot out inducements. Okay, it's just to spot out inducements. So once I spot out my inducements on either 30 minutes or 1 hour or 4 hours time frame, then I will scale down to, if it is the 4 hours time frame that I spot my inducements, I will scale down to 15 minutes to mark out my order block or breaker block. It is as simple as that. Okay, but if it is 1 hour that I spot my inducements, I will scale down to 5 minutes to mark out my order block or breaker block or fair value gap, either of the three, right? So now let's go to 5 minutes since I am spotting my inducement on the 30 minutes time frame. So let's go to 5 minutes, right? Yeah, good. Good. So now, as you can see, our inducement is still intact, right? Our inducement is still intact. Yeah, good. So we have our break of structure here. We have our break of structure here. We have our break of structure here. Before markets fails to pull back to this before markets fails to pull back to this fair value gap or either this other block, right? So now if you should observe something here, this is a fair value gap on the 30 minutes time frame and this is an order block on the 30 minutes time frame, right? But on the 5-minute time frame, we have a breaker block here, meaning that a failed order block, right? This is an order block. This is a bearish order block, yeah, a bearish order block. I don't know if you guys can see this clearly. Let me zoom in. So this is a bearish order block. I should delete these ones. This is a bearish order block, meaning that markets feel this momentum, right? Came down a little, tap the order block. Now instead of selling, markets bought, right? So now whenever markets feels an order block like that, it is going to turn to a breaker block. Okay, so now if we are to extend it, it is a failed bearish order block is going to turn to a bullish order block. Okay, so basically that's just it. So that's basically order block turning into a breaker block. So it is as simple as that. So now if you should notice on the 5-minute time frame, what did the market do? The market tapped it. Now a lot of people might think market has already respected it. Okay, mean the market has respected it already. That does not mean, right? Because now we are only using the 30 minutes time frame. We are only using 30 minutes time frame to spot our inducements. Okay, 5 minutes time frame is where we want to take our entry, and on the 5-minute time frame there are going to be a lot of POIs. Okay, so now on this 5-minute time frame, the only POI I'm seeing, the only point I am seeing to take a trade is this breaker block. Even this other block to me is not valid. Even this other block to me is not valid. I would not lie. Okay, so the breaker block is the only thing I'm seeing. So now immediately market tapped the breaker block, market started buying, right? And this is where our TP is supposed to be. This is where our TP is supposed to be. So we are supposed to take a buy from this low, right? I was supposed to take a buy from this low up to this high. Okay, up to this high. But mind you, the fact that we still have fair value gap included on the 30 minutes time frame and order block included on the 30 minutes time frame, that's the reason why we would not just be taking a buy blindly, because markets might disrespect this order block on the 5-minute time frame and started buying and go to the 30 minutes time frame to tap the order block. Okay, hey, where is this thing now? Good. And go to the 30 minutes time frame to tap the order block and then buy from there, right? So that's the reason why I would not say I would just place my entry just blindly and just say I want to take a trade from there. Okay, so now let's go to the 1 minute time frame. Since market have started the other block on the 5 minute time frame, so now let's go to the 1 minute time frame to observe the change of character I just explained to you guys. So we'll have the change of character I just explained to you guys. So now immediately market has tapped the 5 minute order block. Now let's scale up to the 1 minute time frame to look out for our change of character, okay, to the upside. Okay, here's the chart now. Good, here it is. Good. So now on the 1 minute time frame, just like the same thing I just explained to you not quite long, right? So now on the 1 minute time frame, this is what we are expecting. The one I explained to you is that of market was buying and it's what to sold, right? So the opposite will be market is selling already, right? We have our structure 1, we have our structure 2. Market has already broken this low, right? The market is going to reverse, break structure 1, break structure 2, then give us a sort of pullback, right? This will be our pullback. The market is going to come down and buy from either the other block or the fair value gap, right? So now let's go to the chart. So now on the 1 minute time frame, as you can see right here, we have a low. I don't know if everyone can see this, but I've zoomed my screen enough, sure. So now we have this low, we have this high, then we have this low again, we have this high, then we have this low, right? So now if you should observe here, market broke this, that was when it created a high, then broke this also, right? So now that is to tell you that this is our structure 1, this is the first high, right? And this is the second high, this is the second high, this is the second high. Okay, so now mind you, after noting that okay, market has given me a double break of structure, let's go to the 3 minute time frame to confirm that if it is correct. So basically it might be a week on the 3 minute time frame, but what really matters is if you should use 1 minute time frame to spot your double break of structure, you should stick to that 1 minute time frame alone. Okay, hold on. Okay, good. Let's go back to the 1 minute time frame. Hey, okay, good. So now back to the 1 minute time frame now. Let me delete this. Yeah, so as you can see, we have our structure 1, then we have 2 right here. Good. So now immediately markets gave us a double break of structure. What happened after that? We are seeing this high, then this low, this high, then this low, this high, and this this is not a low yet. Why? Because it has not broken this structure. Okay, because it has not broken this high right here. I mean, yeah, it has not broken this high. Okay, so you cannot, market has not broken a higher high. You cannot say it is a higher low in case of an uptrend, right? The only time you can say okay something is higher low is when okay this is higher high. You can't say this one is an higher low yet, except what is break this high, then it's reverse again. You can't say it is an higher low yet. Why? Because you don't know how far it is going to reverse. Okay, except it break this high. Do you get that? So now having explained that, So this is our pullback right here. This one right here is our pullback. So now in a case like this, I'll be using nothing but the breaker block. I mean a fair value gap, I mean, to sell. Right? That's what I'll be using to sell. And once I want to use my fair value gap to sell, it will be from this first high, from this first break up to this pullback. So it will be a week to week fair value gap. So this is the zone. I want to sell in between this zone. But mind you, my stop loss will still be at this level. My stop loss will still be at this level. Do you get that? So now, in between this zone now, what will I do? I will mark out my breaker block from here. Why? So basically, it is still the same thing. Breaker block turning to what? Other block. I mean, other block turning into a breaker block, I mean. Right? Then I'll take my buy from there. I'll take my buy from there. I'll buy from here. My stop loss will be at this level. Right? And I'll still be targeting this high. I'll still be targeting this guy. This 1:14 risk to reward. 1:14 risk to reward. So now, using entry confirmation is going to help you a lot. It is going to help you a lot. It is going to help you a lot. So that is for gold. So now for EU. Yeah, EU. This is this for EU. I took a trade on EU. Yeah, this particular trade. This was the trade. This was the trade. As you can see, everything is still marked out on EU. This was the trade. So in this case, we have a high right here. Right? We have another high. Hey, come on. Hold on. Yeah, good. So we have a high. We have another high right here. Just now, you must just what you just need is just to now to spot your higher low. If you should know how to spot your higher low on the 1 minute time frame, then you are good to go. So now, as you can see, we have higher high then higher low. So that is to tell you that this is what, this is the what, this is the first break of structure, and what, this is the second break of structure. Okay. So now after the second break of structure happened, what did I do? Market reversed back up to clear this low. After market has cleared this low, then I look out for my what? I look out for my pullback. This will serve as my pullback, right? Which is an inducement. So I will just wait for market to just what? Reverse and then sell from here. So either from the fair value gap or the break or the other block here. So now in a case like this, I was using the fair value gap to take my sell. Now mind you, this will be my stop loss level. This high right here will be my stop loss level. But why is it that markets clear this zone and then still sell? The only reason why is because of redistribution, meaning that market clears out the buyers, clears out the sellers, and clears out buyers, and then sell again. That is the reason why this trade seal. That is the reason why you must not say, okay, because of this your point of invalidation, then your stop loss must be here. Do you get that? So basically that is it. So I was targeting the lower low right here, and this was about this was 1:19 risk to reward on EU. Yeah, so basically that is just it. It is as simple as that. You should just know how to spot your higher low, whereby you would be able to mark your first low, the second low. The market gave you a double break of structure upon the first and second low, then you waited for a pullback and then spot your either fair value gap or other block, then you sell off from there. So basically that is just it, guys. So if you know you like this video and you want to you want access to more contents like this, hit the subscribe button now and turn on post notification so you can get notified whenever I release more videos like this. Yeah, thank you guys.